So can I infer then that you're suggesting we're going to have an inflationary period ahead because of this, what you're just outlined?
There are two types of inflation. Okay. Let me just clarify.
Yep.
There's supply demand inflation, like if demand is pressing up against capacity to produce things, and maybe that's labor, maybe that's capacity constraints and so on and so forth, prices rise because of that. And then there's monetary inflation. And monetary inflation is because the currency and the value of money goes down. And so you can see, like in the 1970s, stagflation. You could see inflation is not coming from the first of those types of inflation. It is coming from the second of those types of inflation. And the way that would occur is because people don't want to own bonds. To me, it's pretty crazy to want to own cash or bonds. Okay, we can get into why that is. But if you have that movement out of like that type of financial assets to other assets, which we are seeing, then that has the effect first of causing financial inflation. In other words, an investor shifts it to another investment and they go up in value. And then that wealth effect has an effect on those items that people who acquire the money want to spend on. So maybe it's on penthouses or maybe it's on something else, but it depends how that's spent. I'm more worried about the monetary inflation, which would look something like a currency defense. It means that what happens is, as money, let's say people don't like bonds, and then they start to sell bonds, and bonds then go down in value because they have a capital loss, and they don't offer anything in interest rates, negative real interest rates, and so on. They don't like that. Then the Federal Reserve or other central banks are faced with the choice of either rates rise, and that is bad for financial asset prices and it's bad for the economy, or they make the purchases. They make money and they make the purchases of that. And that then produces more of a monetary inflation. So it's the second that I'm more concerned with. But the supply demand of debt will be, I think, the big driving influence. And I want to emphasize this because so many people say, okay, well, here, they look at this stock or they look at this. But what you saw was the V bottom in all markets and so on. And that was due to debt and money dynamic happening. So that's the biggest dynamic to pay attention to.
So wait, that V bottom, do you mean a year ago?
Yeah, that's what I'm saying. You could I think it was April 8th or 9th. Mm-hmm. The exact same action was taken basically almost as happened on August 15th, 1971, which was also the exact same action which was taken on March 5th, 1933. In other words, the big jolt, the separation in terms of that value of money, that dynamic. And that is the new paradigm.